All right, let's get right into it. Today, we're doing an explainer on a heavy-duty logistics company that just absolutely defied gravity. If you follow transportation and logistics, you know it's an incredibly cyclical, heavily capital-intensive industry. But TFI International, they just dropped a Q2 2026 earnings report that completely shattered expectations. So today, we are going to deconstruct exactly how they engineered this blowout quarter, unpack the raw numbers, look at their unique operating model, and explore the aggressive M&A engine that just keeps fueling their growth. To make sense of all these stats, we've broken this explainer down into 6 quick parts. First, the headline numbers. Then, who is TFI? Segment breakdown, the M&A growth engine, capital allocation, and finally, the road ahead. Let's jump in.
Okay, part 1, the headline numbers. And spoiler alert, it is a massive earnings victory.
Look, in a historically brutal industry, pulling off a 29% jump in operating income, hitting $220.4 million compared to Q2 of last year, that is just wild. We aren't talking about a slight beat here. We're talking about a massive leap in profitability. And the crazy part, this increase is primarily organic. It's driven by higher revenues and serious margin improvements, alongside a nice $10.7 million bump from recent business acquisitions.
But wait, it gets better. In the logistics game, cash is absolutely king. It's what lets a company weather economic storms or go on the offensive when competitors are drowning. So growing their free cash flow by 11% to end the quarter with a hefty $202.1 million, that gives TFI an insane amount of strategic leverage.
Let's pit Q2 2025 directly against Q2 2026 just to see the velocity of this growth. Down at the bottom line, you've got a massive 41% jump in diluted earnings per share, moving from $1.17 up to $1.65. Meanwhile, total revenue jumped 12% to nearly $2.3 billion, and adjusted EBITDA climbed to almost $364 million. Honestly, these aren't just incremental gains, they represent a fundamental acceleration in the company's sheer earning power.
Which brings us to part 2. Who exactly is TFI International? Think decentralization at scale.
The best way to understand them is this. Rather than one slow, clunky cargo ship, TFI is a massive fleet of highly coordinated, agile speedboats. They run an entrepreneurial management approach across more than 100 operating companies. It is a huge North American network, 620 facilities, over 39,000 trailers, and 18,176 trucks. And out of their 26,000-plus employees, nearly half of them are drivers. By keeping management decentralized, every single operating company stays nimble and can actually pivot on a dime to serve local markets. And check out who they're hauling for. Retail makes up 19%, manufactured goods at 16%, building materials and auto at 13% each, and metals and mining at 8%. Why does this matter? Downside protection. They aren't overly reliant on any single sector, which massively mitigates their risk. In fact, no single client makes up more than 5% of their total revenue. It's just a beautifully balanced portfolio of freight.
All right, part 3, segment breakdown. Let's see what's actually driving this blowout.
Every single segment grew, which you almost never see, but truckload was the absolute rock star here. We are looking at a staggering 50% increase in operating income for truckload, jumping to $105.8 million for the quarter. But the other guys didn't slouch either. Logistics saw a 32% increase, hitting $49.7 million, and less than truckload, or LTL, grew by 17% to $85.8 million, double-digit operating income growth across the whole shebang.
CEO Alam Bidar basically said, look, our diverse end markets and our ruthless focus on cutting capital intensity is paying off big time. He specifically called out their strength in specialized and flatbed trucking. Plus, he noted that the strategic investments they've made over the last few years are finally bearing fruit, and they're starting to see some real incremental pricing opportunities, especially in that LTL segment.
Moving right along to part 4, the M&A growth engine. It's all about highly disciplined acquisitions.
You know, you don't build a massive North American network entirely from scratch. You buy it. But you have to buy it smart. TFI has incredibly strict rules for buying companies. They don't just acquire to inflate their size. They demand that any acquisition immediately boosts earnings per share and free cash flow. The target has to be in the US or Canada, have a killer management team, and offer huge synergy potential. Basically, no dead weight allowed.
And they execute this playbook relentlessly. They aren't just dabbling. They have successfully pulled off 86 acquisitions since 2017. 86! 5 of those were major blockbusters with price tags over $200 million. They have this proven machine. Find the target, buy it, integrate it, and squeeze out the synergies to pump up that cash flow we were just talking about.
So, part 5,
capital allocation and cash. They have built a truly fortified balance sheet.
Okay, these metrics are just wow. They pair a solid 8.5% operating margin with an absolutely phenomenal 89.2% free cash flow conversion rate. If you aren't familiar, this metric basically measures how effectively a company turns operating profit into actual usable cash after accounting for capital expenditures like buying trucks and equipment. Hitting nearly 90%, that is a total masterclass in operational efficiency. Because they generate so much cash, they heavily reward the investors supplying their capital. They've returned $2.7 billion to shareholders since 2017. And, alongside this crazy Q2 report, the board just approved a 47-cent quarterly dividend, which is a 4% bump over last year.
Let's zoom out for a second. Over the last 20 years, TFI has generated a mind-blowing $7.4 billion in total free cash flow. Combine that with a bulletproof balance sheet that has access to $900 million in revolving credit facilities, and you've got a company with the massive strategic leverage needed to pounce whenever a market opportunity pops up. Which leads us perfectly into part 6, the road ahead. The market is just full of fragmented opportunities.
So what are they going to do with this mountain of cash? Bedard is crystal clear. It's ammunition. The North American transportation and logistics space is still highly fragmented. There are countless small regional operators out there. And TFI is sitting there, armed to the teeth with capital and a proven integration playbook, ready to keep consolidating the market.
Leaving us with the ultimate question as we wrap up this explainer. You've got a company sitting on billions in historic cash flow, navigating a highly fragmented industry, running a ruthless M&A playbook at peak efficiency. Who is TFI going to swallow up next? The board is set, the industry is ripe for the picking, and TFI clearly knows how to pick the winners. Thanks for joining me on this deep dive into TFI's phenomenal Q2, and we'll see you in the next explainer.